How's my financial health, Doc? Welcome to the Financial Literacy Podcast for healthcare professionals, where financial security and wealth topics are not a taboo.
So hello everybody, my name is Luca Tran and I am the host for How is My Financial Health Doc podcast. Today I have the pleasure of inviting Jean-Pierre Laporte to this short little video discussing a common problem that physicians have. And so Jean-Pierre Laporte is the CEO and founder of Integris Pension Management, and today he's going to help us answer one very important question. So welcome, Jean-Pierre.
Nice to be here.
So Jean-Pierre, we've been discussing this a lot of times, and one of the key issues that physicians have is once we've practiced long enough, a lot of our accountants and advisors have told us to incorporate and keep retained earnings into the company and invest that money. And then as time grows, obviously we want that investment to do well. And when that happens, we accumulate quite a bit of funds in the company, and now we generate a massive capital gains, potentially a capital gains tax. So what are some of the solutions that you may offer and suggest that we can do with that?
Well, one of the strategies that we've recommended to a lot of physicians is to trigger what we call terminal funding. So that's starting a pension way before age 65 to accompany dividends that the professional corporation would still pay. So you end up with two sources of income, your early retirement pension, and to top that up, some dividends from your company. And when you trigger terminal funding, what happens is the corporation, the professional corporation, cuts a check to the pension plan, and that amount that is contributed is 100% tax deductible to the professional corporation. So in effect, what you're doing is that you're taking monies from the company that haven't been taxed yet, and you are now transforming it into a stream of retirement pension. And that pension is also eligible for pension income splitting. So physicians who do this before age 65 would be able to allocate up to 50% of the new stream of pension income to the tax return of their spouse, thereby reducing the couple's overall tax burden. So this is one of the strategies, one of the many strategies that comes with personal pension plans.
So this terminal funding sounds like a very attractive solution. The question is, if I have this amount that I want to put, this terminal funding is a good chunk of money, where would I find it within my corporation?
Well, your corporation has assets. Those are the retained earnings that have been invested for a number of years. When you sell those assets, of course, that's going to create a tax issue for your company because you're going to be triggering capital gains. However, when you contribute the terminal funding amount to the pension plan, you get an offsetting tax deduction. So you end up not paying any taxes at all because whatever taxes you would have had to pay are now eliminated by the PPP deduction.
And so this amount that is 100% tax deductible, the capital gains that we've incurred with those investments, so we would sell those investments, take the capital gain, but then that would be offset by the terminal funding. Is that what I understand?
That's right, exactly. So it would be a tax-free transfer because whereas the corporation would incur tax by selling the asset, that tax would be negated by the deduction permitted by the terminal funding rules. So the money would flow into the pension plan without creating a tax problem for the company or for the doctor, because it's not seen as an employer benefit So there's no need to recognize that on the physician's tax return.
Okay, got it. So this seems to be quite a very attractive solution, especially, physicians feel like they have to work until they're 70 or 80 just to keep their lifestyle. But from what I understand from this is we can actually do FIRE. So financially independent and recreational employment. So I can, quote unquote, retire early, but continue to work the way I want to work. So definitely makes sense.
Yep, it is a way of controlling the taxes by redirecting them through the pension plan.
Okay. Well, thank you very much, JP. That was very informative and very attractive. So thank you very much. Thank you very much for listening to the show, and I would like to take this opportunity to let you know about my September 17th all-day interactive webinar where we talk more about personal financial literacy. And so please visit the website www.beautifultimesinc.ca/conference and workshops. I always appreciate your comments and feedback, so please email me at hmfhd2020@gmail.com, and looking forward to hearing from all of you, and also hopefully you can give me some topic suggestions for future podcasts.
How is My Financial Health Doc podcast is hosted by Dr. Vukit Tran. Dr. Tran is a physician with a special interest in personal financial security and wealth education. Dr. Tran does not render or offer to render personalized investment or tax advice through this financial podcast. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. Please confer with your advisor, lawyer, or accountant for specific advice.